Good evening, everyone. Hope you can hear me, please. Let me confirm that. Can you hear me? All
Yes,
right.
good evening. We can hear you.
All right. Welcome to day two of the practical accounting training with the Employable Accountants Forum. So, yesterday we started with the basics of accounting. Like we just touched some aspects, the basics. Today we are going to be doing practical. We are going to be doing practical, more of practical today. So I hope we are ready. We are with our writing materials. Yes, I believe we are with our writing materials. We are going to be working on Excel today. So, but before then, before we go into the um lecture for today, we just need to manage time. So before we go to the lecture of today, which is how to prepare financial statements from incomplete record with Microsoft Excel. So yesterday, um, someone asked a question, right, about on business entity concepts, and I just want to add to the comment I made on it yesterday. So I believe the person is on this call, but if the person is not on the call, there will be recording for him to listen. And also, the for those that was not in the class yesterday, so the question was, if a director has an asset before commencing business and the director or the owner of the business is now using that asset for the business, how will it be recognized in the book of the company? So first of all, I want to clarify that when I'm saying company here, I mean either limited liability or PLC, limited liability companies, not business name. So I'm not talking about business name. I just want to clarify that. So it's not business name, but we are talking about limited liability company that they are bearing, they are after their name, you see limited or PLC. Those are the companies that those this rule is applicable to. So for business name is also seen as the individual. So you can use the assets of the owner, and you don't need any um, difficult documentation. So I just want to state that. And secondly, I mentioned that yes, you cannot automatically transfer that asset to the company and said it's the company's asset. But however, there are two ways you can actually do that. So the essence of it is for transfer of ownership. There must be transfer of ownership. So the first way is either the director will give her that asset as his contribution of capital or share capital, because we are talking about companies now, limited by shares and the right and the like. So is either the company gives that asset as share capital. So how will it be done? For that asset to be seen as the share capital, the asset has to be valued in the current market price of that asset. You get the current market price. So instead of the director giving cash, he is now using his assets, those assets that was purchased in his name, as his contribution to the business, right? So that value, let's assume the asset that is given is worth 100,000, for instance. So that value, the market value of the asset is worth 100,000. So the 100,000 will now be classified as share capital for him, while the asset becomes the company. So there will be a documentation to that effect. They have to be a documentation. So if you want to do the accounting entry now, is for you to debit the assets, whatever asset is being brought in, and credit share capital, because share capital is an equity item, right? So with that, you have been able to pass ownership from the director to the company. So that's one way of recognizing a director asset as a company asset, and there must be a documentation to that effect. You don't just It's not just accounting entry only. There must be a documentation stating that the director is passing that asset to the company in form of as his contribution to the business. Then secondly is the second way that the asset can be classified as the company's asset is for the company to purchase the asset, to buy the asset from the director. So there must be movement of cash. There must be movement of cash from the company to the director. So, and there will also be a documentation. So these are the two ways that a director's assets or a shareholder's assets can be converted to company's assets. So I believe we got that. I just needed to add that to what I mentioned yesterday. I believe we got that. All right.
Yes.
So today, thank you. So today we are going to be looking at how to prepare financial statement from incomplete record. From incomplete record. So first of all, I would like to clarify what are incomplete record. What are incomplete records? So incomplete records refer to accounting records that do not contain the complete double entry bookkeeping system. So when we are saying double entry, it's not a cliche. Even in practice, you have to every transaction must pass through the double entry system. So you have to debit one account and credit another account. But some businesses, they don't have the resources to maybe employ an accountant to be doing all of those stuff. So they just record maybe through their bank statements. Whenever they make any transaction, they might just put the narration, purchase of book, purchase of this. So they don't really have that expert or that personnel to help them put all of those transactions in place. So that's those kind of things now, those kind of narrations, they are incomplete record, because it doesn't pass through the double entries principle, right? So businesses operating under this system usually maintain only partial accounting information. So what companies that keep incomplete records are, like I said, small businesses, sole proprietorship. They don't have the fund to employ accountants, right? So they will just do their recording themselves. But sometimes they want to know if the business is profitable or not. But they don't have the funds to employ a good accountant, right? So they will just tell you, I'm doing my recording, I'm recording all my expenses, my income, but they are not doing the double entry principle, right? So those form of businesses fall under this category of people that keep incomplete records. The small and medium enterprises. So there are some businesses that are still limited, but they still do not keep complete record. They still do incomplete record, entry, partial entry, not double entry. They just do one single entry. Then we have startup businesses. So this we have been talking about incomplete record. What are the type of incomplete record we have? We have petty cash book. So majority of those small companies, they keep petty cash book. They just record their expenses, what they spend on a daily basis. They just write it there. We have sales record. Some also keep sales record. They record every sales that comes in on a daily basis. Some also keep purchase record. But all of these records, they don't pass through the double entry principle or system. Some keep their debtors and creditors list, the trade receivable and trade payables. Then another incomplete record that companies keep, I'm talking about real life now. What they keep is bank statement. So we've seen that most companies, whenever they are making any transaction from their bank, they always put narration. So most times it's for the accountant or whoever that they will give to prepare their financial statement to be able to know what they use, um what every transaction was made for. So they always put narration whenever they want to transfer money for maybe purchase of goods and payment of any services. So for tonight, we are going to be starting this training with bank statements, preparing financial statement with bank statements, right? So by tomorrow, we are going to build it up using bringing in other incomplete record like petty cash and debtors lists and the rest. So tonight we are going to start with our bank statements. So I will just share my slide. I have a bank statement here that we are going to be using. Okay, so most bank statements comes in PDF format. Most bank statement comes in PDF format. However, you can actually request from the bank for them to give you an Excel copy, because for you to analyze the bank statement, you have to convert to Excel. So you can request for an Excel copy, but most times it comes in PDF format. So it is now your duty for you to convert it to Excel. And there's a free tool you can use to convert to Excel. So let me share my there's a free tool you can use to convert to Excel. Please, if your camera is on, you can just help us turn it off.